Exercise 2.5 is asking you what impact do these various transactions have on the retained earnings account of this company. So the company is named Al Corporation, and they tell us a few things. They tell us that they issued common stock for cash. Well, that has no impact on our retained earnings. Common stock is part of equity, but it's not part of retained earnings. Then they tell us we provided service to customers for $8,500. So that is indeed an increase to retained earnings. Then we provided services to customers again for cash. Still an increase to retained earnings, because remember, this is accrual accounting. So whether it's on account or in exchange for cash, it doesn't matter. Next, we purchased some equipment and we paid cash, but we could have also paid in baklava or paid on account. That also has no impact on retained earnings. We just got an asset. We paid rent. Now that's an expense. That has reduced the wealth of the company. So that does indeed impact retained earnings by the amount of $1,100. Similarly, when we pay our employees $3,500, that also reduces the value of the company, so the retained earnings goes down by $3,500. And then last but not least, we just flat out gave $2,000 of our retained earnings to our stockholders. So that's a $2,000 reduction. So when you do all of the gazintas and the gazaltas, beginning with the 13, adding 85 and 32, and subtracting 11, 35, and 2,000, we come up with an ending balance in retained earnings of $18,100. And that should be in black or green because that's a positive number.